Welcome back. Now the Nifty is moving closer towards that 24,700 mark. So the recovery continues for the market from the lows. As we speak, a couple of stocks which are doing well include the realty sector. So the realty index should come up for you. That's at the high point of trade, and that's led higher by DLF, Godrej Properties, Macrotech Developers, all of them spiking right now. So the realty index was one of the few that was actually doing well in today's trading session, and that continues to accelerate ahead even as we see an up move in all of these names. Let's go across to Nigel now, who's in conversation with Neha Manpuria, who is the Senior Analyst, India Pharmaceuticals and Healthcare at BofA Securities. This from the sidelines of the BofA Securities 2025 India Conference. Nigel.
Well, thanks a lot for that, Manglam. I'll take the discussion that you all were having ahead on the pharma space itself. And Neha joins us on the show from the BofA conference. Thanks a lot, Neha, for joining in.
Thanks, Nigel.
Well, most discussion points nowadays revolve around President Trump. So let's start off with that first.
Sure.
You know, what's the probability that we see Trump's tariffs on generic drugs? And as of now, what is the street ready for? What have they factored in terms of
Sure.
the numbers ahead?
So you're right. Obviously, a lot of discussion is around what President Trump would do on tariff, non-tariff, actions on pharma. Now, sticking to tariffs, I think there are a couple of things that we need to keep in mind. One, remember that there's an official 232 investigation that the U.S. has launched to understand the national security risk of having so much dependence on countries outside of the U.S. So I don't think the idea of tariff for pharma is as much about revenue potential for the U.S. government. I think it's more about national security, that you have dependence of antibiotic drugs or basic drugs on other countries. So I think the way this could go down is probably you could have tariffs for different countries. It could be different for branded and generic, or it could even come down to companies based on whether you have manufacturing in the US, how much manufacturing that you have.
Yes.
Probability, I mean, you must have heard most Indian companies, everybody's expecting some action, probably June, July, based on our US healthcare policy analyst as well. They believe that, you'd probably hear something around this, in the near term. Your second question, what the street is prepared for.
Yes.
I mean, we have seen the street recover, especially the pharma stocks recover after the initial knee-jerk reaction when the tariff noise, started.
Yeah, the tariff is no longer scaring them, at least as of now, because the dips get bought into. But what are they penciled in?
So from a stock price perspective, obviously you're building in no tariffs or very little tariffs.
Okay.
I think it also, for generics specifically, there is a lot of discussion about how the margins for generics, particularly your commodity generics, are very low, probably less than 15% for your commodity generics. So if you have even a 10% tariff, you don't have that much room to make money. So that could lead to discontinuations and shortages in the US.
Yes.
So there is a lot of discussion about particularly for commodity generics, do you pass on that tariff to the distributors and the wholesalers who capture a larger portion of the value chain of the
Yes.
profitability in the generics. And I think that's why that low or no tariff scenario, that even if let's say there is a 10% tariff, you probably are able to pass that on, which limits the earnings impact for pharma companies that are focused on the US.
All right, so a 10% tariff could be digestible by the street, at least as of now. Something above that could be a bit of a shock, and it could be viewed negatively.
I think more than being viewed negatively, it's also about the repercussions it could have on the US, pharma industry in terms of price increases because you have to pass it on, or drug shortages because you see exits.
All right, but what kind of strategies can Indian pharma companies, adopt to try to, digest these US tariffs? We must be having a couple of aces up our sleeve, right? If you could tell us the way out.
I think in terms of options, obviously the straightforward one is setting up more capacity in the US, but that takes time.
Yes.
It does not happen overnight. It will take you 24 months or more to get that facility up and running, get all the approvals, do the site transfers, etc. So it's not an overnight thing.
Yes.
Then there's also the question of, okay, I produce these drugs in the US which are higher priced, but who buys those drugs? So you need to have the government saying that, okay, I will give you incentives to offset the higher cost. So that's one. The second, like I mentioned, is the pass-through.
Yeah.
You have your wholesalers and distributors who are making more margins, so you pass through part of that impact to them,
Yes.
Through higher pricing. So there are options, but I guess it will all boil down to what's the tariff, your discussions, the discussion that companies have with the customers as well as the regulators in terms of what incentive they're ready to provide to actually set up a facility in the US.
Okay, all right. Interesting times then. Let's come back home then. Let's talk about the hospital space. You know, you have the Adani Group that's announced their plans that they want to be part of the hospital industry. You know, for my core sector, cement, I've seen them come in there.
Yeah.
People thought it'll be very, very disruptive. May not be as much as what we anticipated. Now, given that they're looking to get into the hospital chain or the industry, how do you view it? Is it positive for the industry? Is it a big risk that someone is coming with that much of muscle power? Your take?
I think, Nigel, we have to remember here that details are very limited on that announcement. I mean, what we have heard is probably a few hospitals in Mumbai at the moment. And given that both of us are from Mumbai, we know that we need more hospitals, right? And even more so when you go to tier 2 and tier 3 towns in India. So I think demand is not a problem. Obviously, the question is, how much of this capacity actually comes through? Where does it come through? So, if you look at the Mumbai, micro market, there is need for more organized chain, and you're seeing that by more and more companies announcing capex plans here. Yeah. So, again, we'll need to see timelines of this expansion. Do they have a larger plan in place? So this is just a one-off, announcement that they've made. Limited details to actually, give any color.
So we'll have to wait by to hear from the Adani Group itself. But I'm just looking at, we've been speaking to a lot of companies, a lot of the hospital groups in the past quarter, say the month of May itself. And a lot of them, one pressing point besides the profitability, etc., was that we are setting up higher number of beds. We know the scope for penetration is huge here in India. But if you see a high number of beds coming in, will it limit their profitability? EBITDA per bed could take a bit of a knock. Margins could pull back a little bit. How do you view this play out?
I think this is one of the big discussion points when it comes to hospitals. You're going into expansionary cycle for the industry as against the last few years, which has been about consolidation phase, right? You've not seen as much bed expansion. Again, here, a couple of things. One, if you look at bed expansion, it's again focused on a couple of markets. You're seeing more in Bangalore, Delhi, Kolkata, probably Mumbai. So it's not like there's bed expansion everywhere. Second, it's staggered. A lot of the bed expansion has been announced. That's capacity numbers. If I'm announcing a 300-bed capacity, does not mean I switch on 300 beds on day one. So you try to calibrate your bed addition to limit the impact that it would have on margins. Third, there are also specific companies that have announced brownfield expansion, where your incremental EBITDA tends to be much higher than versus the pure greenfield. So I think we also need to look at those nuances. So if you actually then come down, you probably don't see a very large margin impact, at least for the next 2 years for the entire sector, because of how these bed expansion is planned, and also from the recent experiences in terms of how commissioning of the new bed has been done. It's been more calibrated versus all in one go.
So you don't see it as a big risk. There are a lot of queries about this, but you don't believe, at least as of now, it will be done in a staggered manner, and you don't believe it's that big a risk to
That's
the
correct. At least for the near term.
Well, Neha, thanks a lot for joining in. We'll keep in mind, tariffs up to 10% could be digestible. Something more than that could be a bit negative. A lot of supply coming in there. We'll wait by for Adani's plans with regard to the hospital chains. And also you believe that the fresh supply that's coming in there may not be very, very negative for the profitability. Thanks a lot, and wishing you all the best for the conference. Well, guys, that's it from Neha with regard to the pharma and the hospital space. Back to you guys in the studio.
Okay, all right. Thanks, Nigel, for that. Definitely a rare space when it comes to pharmaceuticals. Neha Manpuria of BofA there. We need to take a short break with the news that we have some amount of pressure in terms of the Nifty, but no accelerated losses at this point in time. In fact, we have the Bank Nifty, which could probably turn a little into the green as we speak. Mid-cap index still holding up with a gain of around 0.3%. We'll take a short break. Sudeep Shah from BofA Securities will join in with some trading calls.